Who's this? Oh, you're an entrepreneur? Oh, you're a real estate investor. Oh, you're trying to learn from those who did it. Well, come into the lab then. Put your white coat on, gloves on, notepad, and let's build, y'all.
Real estate experiment. What is happening, y'all? Today we have a very special guest, Brett Swarts. Thank you for stepping in the lab with us. And I'm very curious. You have quite the resume, and you have quite a lot of tools on your belt. So first of all, that's very impressive. But I always like to ask, when people have a lot of tools on their belt, what is the elevator pitch? Like if you and I meet and I shake your hand, in which we're doing virtually right now, responsibly, here March 31st during these unknown times, we're meeting here virtually. What is your pitch introduction to me and my audience? Like, what do you say? Who is Brett?
Absolutely. So most high net worth individuals, or those who are selling a business, investment, real estate, a high-end primary home, they struggle with capital gains tax, somewhere between 30 and 50% when they go to sell their highly appreciated asset. And we use a deferred sales trust to help them gain tax deferral, liquidity, diversification, and eliminate the need for the 1031 exchange, and develop a passive or active wealth plan so that they can create and preserve more wealth. We're really focused on empowering individuals when they do succeed at business or real estate to take some chips off the table, or to diversify, or to get out of debt, and to take some risk off the table, and really take back their time and their energy, and then create a passive or active income stream from that, so they can use the God-given gifts they've been given, or they can start a new business venture, all tax deferred, which is the key here.
Okay, so now we just met, and I'm like already hearing you're already trying to solve a problem for me. How generous of you. But let's take a step back. I like trying to identify who the person is behind the business. And Brett, seems like you came up with a solution. Was it to scratch your own itch, or how did you get into this? What is the background? Was it real estate on the broker side? Was it investing first? What came first? I see you got series. You got a bunch of things going on. Talk to me, brother. What do you got?
For sure, yeah. So thanks for asking. So I started in 2006 at a company called Marcus and Millichap, helping people buy and sell investment real estate, and really focused on multifamily. And we learned about a strategy called a 1031 exchange on about day 3. And for your listeners who are curious, that's a way to buy real estate, add value, appreciate, and then you sell, and you can trade it for another like-kind investment real estate and defer all the capital gains tax. And so during that time period, I saw a lot of people buy, and I think overpay because the market was so on fire. And then something happened, and you and your listeners might recall, it was a 2008 crash, and there's a lot of similarities that's going on right now with the Corona crash. And essentially, a lot of people got hurt. And that includes friends and family and clients. And some of them lost everything. And they had worked 20, 30, 40, 50 years investing in real estate and got over leveraged and overpaid because they felt like they had to via the 1031 just to defer the tax. During that time period too, I was kind of new in the business, and also just married, and baby girl at home, and trying to support my family. And I had to figure out a way to make it in the business. So I did what every good entrepreneur does, and you look for creative solutions. And you also get a side hustle job. I went to Cheesecake Factory and worked as a server by night, and by day I was sitting in what I called the cubes, making calls to potential clients and trying to solve their problems with investment real estate. I did that for 2 years while the market was just down and out. But I fell in love with real estate, and I fell in love with helping people solve problems. And also during that journey, I found my guide at the time, which is a gentleman who introduced, he's my business partner now, this concept called a deferred sales trust, which eliminates the need for the 1031 exchange. And so this is about 2009. And I'm sitting there going, really? How do we not know about this? How did anyone not tell you about this? You're telling me we could have protected all of these people, and we could have got them out of real estate, out of debt, out of overpaying. And that began my journey and set into motion my plan to educate all of my clients. And then fast forward, educate brokers along the way so that they can add value to their clients and help them escape feeling trapped. So fast forward, now it's over 10 years of studying the structure, using the structure, and helping clients escape feeling trapped by capital gains tax. I've been able to support my family. We have 5 kids. We live in Sacramento, California. I also played basketball in high school and college, and that was a big part of my life growing up. And I was fortunate enough to have a scholarship for that. But really, it's just at the end of the day, I like working on teams, helping people solve problems, and this deferred sales trust is a tool that helps that.
Okay, cool. So first of all, I love that because I think sometimes you throw around the word entrepreneur so too lightly because it sounds cool, but essentially you're trying to solve an issue, right? And so I want to go back to you mentioned solving a problem for your clients. At the time, this solution, was it coming from were you a partner on this? Were you were you a broker? I'm just trying to make sure I understand how, in what lens were you solving this issue, and so I can understand how you were able to see the opportunity and slash the ability to solve the problem.
Great question. So I was a commercial real estate broker, right? So helping people buy and sell investment real estate. And we were doing the 1031, but it just kept coming up short and it kept becoming problematic. And
can you enlighten us on that? I don't mean to jump in because I'm piggybacking. You're making some great points. I want to make sure we don't miss it. Why might someone, what are some of the restrictions that maybe the 1031 exchange has for those of us who are listening who may not be familiar, to shed some light on why you actually saw the opportunity?
Sure, absolutely. So first of all, the 1031 exchange only works for investment property, okay? It's been very, very restricted even as the last tax plan was released a couple of years ago. And essentially, if you're selling or buying or investment real estate, you can use the 1031 exchange, but it doesn't work for the sale of businesses. It doesn't work for the sale of Bitcoin. It doesn't work for the sale of artwork and collectibles. It doesn't work for a primary home. It doesn't work for a dentist or orthodontist or optometrist. Anything else that's really a lot besides investment real estate, the 1031 does not work for, but the Deferred Sales Trust does. With that being said, if you're buying and selling investment real estate, you have some limitations when it comes to the 1031. You have to follow certain rules. And these rules are set by the IRS, and the tax code is IRC 1031. And essentially, you have to go out and you have to use an intermediary to move the funds to, and then you have to identify within 45 days potential properties you're going to buy, and then you need to close on those within 180 days.
Okay, excellent. So I want to take a step back because I want to make sure folks are listening, because this is, I'm so glad you're here, by the way, and you'd be surprised. We have a lot of cool individuals. And when I say cool, it's the amount of impact they've been able to have it within the real estate community, a lot of thought leaders. And I don't think I really had anyone who really specialized in 1031. We actually just had someone who talked about a bridge trust, which I'm so stoked to hear how your deferred trust works. But let's take a step back. 1031 exchange. A lot of folks are familiar with the property to property, but you mentioned something about it's not applicable to business. Can you just make sure we hone in on that? Just because maybe I'll ask the question for the audience. Could I own could I be a dentist and I want to sell my practice and then roll it into a building? And could I do that? Or is it limited to the same type of asset? Maybe you can shed some light on that.
Yeah, so it's like-kind investment real estate for like-kind investment real estate. And I guess technically you could try to sell a business and try to do a like-kind business transfer for a 1031. However, I've never seen that happen. And the biggest reason is if someone's selling a business, the reason they're selling is to get out of the business, right? They're not wanting to stay in the business, or they just stay where they're at. So I've yet to ever meet someone who's actually done a 1031 for the business, but I guess technically you could do that. But essentially, practically, I've seen nobody do that. That being said, if you were a dentist and you owned the real estate that you were selling, right? Some people will discount the business and then have them buy the real estate and then try to do a 1031 that way. There are some creative ways you could try to navigate that. But again, it can get complicated and you can't do that for the full amount. It needs to be commercially reasonable, and we don't necessarily recommend it. We recommend just selling what the business is worth, selling the real estate what it's worth, and then deferring the tax the way you want to do that. So it kind of gets a little bit technical, but we think the easier way is just using the deferred sales trust, because all the proceeds can go there and it's all tax deferred, and then you can put it back into real estate if you want to, or stocks, bonds, and mutual funds. But back to the shortcomings of the 1031, we call it the buy high, sell high, and then buy higher 180 days later. So our parents taught us to buy low and sell high, not sell high and buy higher 180 days later. And that's what the 1031 too often forces people to do, which leads into the second thing, which is taking on too much debt. So part of the 1031, you have to buy equal or greater value, which means oftentimes equal or greater debt. And when you do that, you take on risk, especially if the properties are highly appreciated and you're in a seller's market. So, for example, we just closed a deal last week for a gentleman who sold a $7.6 million multifamily property in Georgia. And part of his goal was to find a 1031 property, but he couldn't find one that made a lot of sense. And then Corona hit, and it really didn't make a lot of sense because everything hit the fan. Fortunately enough, he was with a 1031 exchange company that allowed him to do a deferred sales trust. And so he just closed, paid off all of his debt, and moved all of his funds into a deferred sales trust. And his goal and his strategy is to wait for the market to shift. So not only is he buying stocks low right now because the market's on sale, but then second, he's going to probably ride that up and then redeploy back into real estate when real estate goes on sale, which we think it probably will go on sale with given what's going on. We'll see, right? But the point is he's out of debt. He's diversified, and he's waiting for the opportune time. We call that optimal timing. Has nothing to do with the 180 days, nothing to do with the 45-day sprint, and he's also out of debt. So I'll pause there because I know I said a whole lot.
Yeah, no, you're bringing so much light to this, and I appreciate it. So we definitely see that the deferred sales trust is kind of maybe an elevated or graduation, or it gives more flexibility. And so can you shed a little bit more light? And because when you get into the lab, we want to get a little tactical so for people can take some key takeaways from that. What are some, at what point may I find myself speaking to someone like you? Is it before I'm thinking of getting out of the current asset that I'm in? Do I have to locate an asset ahead of time and then think, hey, then I'm going to help me out here with the timing? I don't know if it happens before, during, or after. At what point do you get involved, Brett?
Great question. So the earlier the better, right? So we want to educate you and your trusted advisors and make sure that A, you're comfortable with what the structure and strategy is. B, you have your deal lined up and so that it's not too late as well. So a couple things. So you need to have language that is inserted into the purchase and sale agreement that essentially gives you the option for the deferred sales trust. And if as long as you put that in there, you have that option. The second time period we have to find is at close of escrow. We need to make sure the funds are directed to the trust and not to you personally. So the way it works, Ruben, is imagine it was a $10 million sale. Yeah. And let's imagine you had a zero basis and it was a business that you're selling. And if you were to sell today, you'd owe about $4 million in tax, about 40%. Yeah. And so you say, well, I can have $6 million or I can use the trust. And if I use the trust, $10 million minus some fees, I think I'd rather have that. So you decide to do that. Well, if for some reason escrow sends the funds directly to you, the tax is triggered. But if you can have the funds sent to the trust, this is what we do, then it's all in a deferral state. And then we set up a payment plan based upon your needs and wants. And basically, you live off of that interest. And so you get to live off interest of $10 million minus some fees versus interest of $6 million minus some fees, which before the funds go anywhere, we would say, well, Ruben, where were you planning on putting it? And you said, well, let's plan on diversifying it, maybe put it a little here, a little there. Great. Let's mirror that exact same allocation and let's put it there. Well, I think I want to buy some real estate tomorrow or maybe day 181 or 5 years from now. Great. When that happens, let's sell out of your positions in the stocks, bonds, or mutual funds, and let's fund that new LLC to go purchase that piece of real estate or start that new business. And here's the key. All tax deferred, right? Which is the key here. We're deferring the capital gains tax so that you can live off more of the wealth. You can create more of the wealth. And by the way, the government does this for a few reasons. It's a study of macroeconomics. And the reason they allow you to do this, Ruben, is because they don't want you to sell that $10 million asset and put that $6 million under your pillow and have it not out there working in the economy. So as long as you're putting it and following the rules with the DST, which are business purpose, and putting it into investments, it's actually going to spur the economy and it's going to create more jobs. And when it creates more jobs, the actual IRS, they actually get more tax revenue. That's the key here. And at the end of the day, it's a win. It's actually a win for the government. It's a win for you. And it's a win for us too, because of course we get fees off of this. But that's essentially why this law has been around since the 1920s, and why we've closed thousands of these trusts, and why we've survived 14 no-change IRS audits, and it's survived scrutiny from FINRA, national law firms, CPAs, tax attorneys, you name it, because it works and it's actually a win-win for everybody.
Okay, so I'm glad you mentioned that because you're transitioning into my next question, but let me take a step back, maybe a learning point for myself. What is the DSC?
So it's a deferred sales trust. It's a manufactured installment sale. It's kind of known as a seller carryback. So one way to look at it is, and you may know this, and your listeners may know it, but definitely their CPA does. If you were to carry paper, when you do that, you're in a deferral state. So let's go back to that $10 million example. Let's imagine you're not using the DST or a 1031, but I show up and I say, hey, Ruben, I'm going to buy your business for $10 million. How about this? I'll give you a $2 million down payment. Would you carry a note for $8 million? And you say, sure. Now, on that $2 million, Ruben, you've received that, so you're going to have to pay tax on that. It's called actual receipt, okay? But on that $8 million, it's in a deferral state, okay? And imagine you did a 30 or 40 or 50-year loan. As long as you don't receive that $8 million, you're not paying capital gains tax. It's not triggered. Now, the interest payments you'd pay tax on, right? Ordinary income tax on that. So let's take a little shift here. Imagine I gave you a 0 down payment. I said, hey, Ruben, 0 down payment, would you carry a note for $10 million? And you say, sure. And that scenario, you've received 0 today, so 0 is triggered today. Therefore, you're in a deferral state on the full $10 million. The only difference is we have this trust come in, okay? And this is what happens. We have a buyer lined up for the full $10 million. They're ready to buy it. And they got the cash. They're ready to buy it. And you're about to accept it. But instead of doing that, you have the trust jumping right in between close of escrow. And what happens is the trust actually buys it from you, Ruben, for $10 million. And it turns around and it sells it for $10 million. Okay? Now, if the trust bought and sold for the same price, Ruben, how much gain does the trust have?
Wow.
0. The answer is 0, right? So it has no tax. Now, Ruben, if you received 0 down payment and you took back a note for $10 million, how much did you receive today? 0. Therefore, there's a 0 tax due today. It's deferred, right? It's kind of like an interest-free loan from the government. The government says, Ruben, you owe us this $4 million tax liability, but tell you what, we'll give you a 0 interest, and as long as you take that $4 million and you invest it for business purposes and investment real estate, and you live off the interest, you can keep that going for as long as you want. So most of our notes are 10-year notes, and at the end of 10 years, they can renew for 10 years, pass it on to your kids. Most of them earn about an 8% return, net about 6.5% after fees. But here's the key. You're building more wealth, and you're able to give more. Right? You're able to help those who are most in need more. You're able to start new businesses and spur economic growth, right? You're able to you can help your family out. Whatever you want to do, you can live off the extra interest payment and do whatever you want with that money. But the principal must be in it for business and investment. So I'll pause there because I said a whole lot, and I know that can be a bit complex.
No, I think, first of all, you're bringing a lot of alignment even to myself because I am not as familiar at all with this. Is very, very new information to me. And I think the example is very practical, and I think that's very helpful. So I guess the next question that I would have for you is, you mentioned your clients. You're currently a broker. You're helping people out with this. Are you currently only helping individuals who you're actively representing? Like, does that fit in a glove? Does that come hand in hand? And if not, I'm thinking, if I know this knowledge, and I'm thinking, okay, when it's time for me to sell and I'm ready to go out, then I should contact you. I guess, how do you work your business because the timing must be such an important pinpoint for you in your business. So how does that work for you in your world?
Great question. So timing is everything, right? So we have to get this in place. We have to educate. We want to be early. So when I first started out, that's what I did. Actually, it was just my clients and my friends and family, and that's how I got comfortable with it. But then as I did more deals, and I slowly moved to not just me, but actually empowering the business professionals. So I partner with financial advisors, business brokers, commercial real estate brokers, commercial real estate operators, and I empower them with the strategy, and I actually coach and teach them how to use this to grow their business. So let's face it, automation is challenging the value proposition of every single business professional out there, right? It's taking over the world in a lot of ways. And for example, the realtor, Redfin and Zillow and iBuyer, all of those things are challenging. How much value do I want to pay the 6% commission to a realtor, or can I just hire a robot, or just someone who's on a flat fixed small fee? Yeah. And so the same thing's happening in financial advising, and it's going to happen to commercial real estate. And essentially, we need, as professionals, we need to add value. So how do you add value? You bring things to the table that are going to save the bottom line. And in this scenario, literally, this is probably the biggest deal most clients are going to do, and it's the biggest expense they're going to have in their entire lifetime is this capital gains tax. So we think we have the perfect solution for the perfect storm that's facing all of these business professionals, which leads me to the second point, the demographics. The demographics are staggering, okay? There's about, according to the American Bankers Association, there's 17 to 20 trillion dollars, which will pass from one generation to the next in the next 20 years. And this is known as the largest wealth transfer in the history of the planet.
Wow.
Okay, I want you to think about that for a second. Every day there's 10,000 baby boomers turning 65, and there's 77 million in the US alone. And they are struggling with, how do I trade toilets, trash, liability, this business, this real estate, all it takes, all my time, energy, dealing with all the laws, all this frustration, and how do I retire from it without getting hammered by 30 or 50%? How do I give it to the next generation? The next generation is our generation, Ruben, right? And so they're trying to transfer it in a way that's practical and that gives them retirement and gives them debt relief and doesn't have to go up and down in these big market cycles, but they feel trapped. And so when you can provide this solution to them, not only do you grow your business, you get more listings because you're solving problems, but then you get more referrals, right? And then everybody wins. So I'll pause there because I know I said a whole lot, and hopefully that makes some sense.
No, that's great. I think what I really like, I've always liked business models that almost complement the existing one that you're in, right? So you've supplemented your services with this solution. But we're here in the lab, and we're in the keeping it real segment. So I'm curious. I actually had somebody, again, a lot of our audience is either entrepreneurial, they own businesses, and they love real estate. That's why I love mixing in the two. From your point of view, as someone who might be listening who's inspired by this, how are you monetizing this service? Are you consulting, or do you have I know we had a guy out the other day who licensed this product. Like, I'm very curious as to, on the business side of things, not only are you adding value, but how are you monetizing from this to bring enlightenment to people?
Great question. So we get paid an annual recurring fee based upon the assets under management. Okay,
nice.
So we get paid at closing, and then we get paid at annual recurring, which is a good place to touch on the fees right now. So what are the fees? So there's a 1.5% fee, one-time fee to the tax attorney, and that's paid up front, and that's at closing, and that's from the trust proceeds, and that includes audit defense, the legal and tax structure, and lifetime audit defense, by the way, for the entire trust. If you're audited, he provides all that legal expense. Now, the second fee is basically to the financial advisor and the trustee. So we have thousands of financial advisors across the U.S., but essentially that's a 1.5% all-in fee for that. Okay, and that happens, at close, and then once a year thereafter. Now, hopefully, we're going to out-earn that, right? Remember, so we're hopefully earn 8, net about 6.5. But at the end of the 10-year term, we're hoping to earn 9, 10, or 11 over that 10-year term, and net the client 8. So it's pretty good, right? Considering if you can do that and save on that tax. So, but that's how we do that. And so on the other side of it, for our strategic alliances, right?
Yes.
For those who are trained and coach and adding value and are helping to bring business, right? We do pay a referral fee for those that are eligible for that. So, but that's on a basically an application basis. We're not in the business of just recruiting based upon referrals. We really want the person to see it as a way to grow their business, just naturally. Like you said, it's just a natural byproduct. Hey, I'm listing your house. Like, for example, we sold a house in Cupertino just a couple months back, and that agent sold it. It was a $3.1 million house. She lived just a few miles from Apple, and she had rapidly appreciated. Her kids are gone. House is empty. She has debt on the property. It's basically like Rich Dad, Poor Dad. It's a non-income producing asset. It's a liability. Really what it is.
Absolutely.
And so she has all this equity tied into this house. And so, but if she sold, she's going to pay about $400,000 in capital gains tax. So she felt trapped. And by the way, this is above and beyond her 121 exclusion, which basically states if you live anywhere from 2 of the last 5 years as your primary home, you get a 250 exclusion if you're single, and then a 500 if you're married. And that means tax-free for what you bought it for and then what you're selling for. But in her scenario, it was so appreciated, she had a $400,000 liability. So what did she do? Well, she used our service, and she was really happy to do so because she was able to sell her house, pay off all of her debt, put it into cash flowing producing assets, right? And be free from her house. And so that's what we allow that realtor to do. So they win the listing, they add the value. And by the way, now they're able to charge that 5 or 6% fee because they just saved the client $400,000. So it's a mathematical equation. That's what we love about the Deferred Sales Trust. It's so practical. And we have a Deferred Sales Trust calculator that you can go to our website, click on it, and boom, give you a side-by-side comparison. And then we sign up, we bring in business professionals who sign sign up and get their own deferred sales trust calculator. But essentially, it becomes a value add tool. We think the most valuable value add tool to attract high net worth individuals and to help more transactions actually happen.
That's fantastic. So again, if I'm listening right now and I'm a business professional, who are you talking to exactly? Is it broker? Is it accountant? Fill me in here. Who are you speaking to right now, and who should be working with you?
Yeah, the top two would be, of course, the CPA, right? Yep. It would be maybe the mergers and acquisition business attorney, right? Those are the top two. The next ones would be the business broker who's handling the transaction or getting the listing, and it would be the high-end primary realtor, okay? Mm-hmm. Those would be probably the top ones. The next layer would be commercial real estate broker or the commercial real estate operator. So that would be the next layer. And the reason I say the next layer is just because they at least have a 1031 exchange, whereas the top layer doesn't even really have a 1031 exchange, so it's kind of we're kind of the only game in town for that sense. It could be anyone who's helping high net worth individuals. So that's really where it starts. If you are focused on attracting and also helping high net worth individuals, this is where this tool comes in, especially if your demographic is the baby boomers, because of that large wealth transfer that's going to happen. We think we are positioned really well to help you out and to help them out.
That's fantastic. So I'm curious, you have a lot of people, and we're getting down to deep into the lab segment here. I'm curious, what is the biggest misconception that you often hear especially because you're so well educated on the difference between 1031 exchange and deferred sales trust. So what is the biggest misconception that you think even people with wealth even have in regards to their capital gains being protected?
Yeah, and so it has to do with a couple things. It's usually the vehicle, the internal beliefs, and the external beliefs, right? And so the first one is what the vehicle themselves, when they hear about this for the first time, they're going, it's too good to be true, right? And that's what I thought too when I sat in the office at Marcus and Millichap years ago going, whoa, this sounds too good to be true, right? And how is this legal? Why haven't I heard of it? And it's that idea that you've gone to this general practitioner, Ruben, all your life, and it was your doctor, and you're there since you were a kid, and he's taking care of you, and he's a family practitioner, and all this general work. But all of a sudden, you have a big major life event, and you need surgery, right? And you may need brain surgery, right? And this general practitioner has helped you so much, but he's never done the brain surgery, right? So too often they run back to the practitioner and they go, hey, there's this new thing. I never heard of it. What do you think? And the person goes, well, I've never heard of it either. I've never done it. I'm just a general practitioner. And they get fear that grips them sometimes that it's too good to be true. If they haven't heard of it, it must not work. But at the end of the day, there's general practitioners, there's brain surgeons, there's knee surgeons, absolutely, right? And you have to hire the specialist to help you solve that problem. So the key is you ask about the track record, which thousands of closes, 14 no change IRS audits. We have private letter ruling. We have national law firms that you always want to look at the actual evidence of the track record. And then you want to make sure that whoever's going to help you in a transaction is able to defend you from the IRS and has a track record of success with this structure with the IRS, which we have, and is also going to indemnify and provide the audit defense. So that's the biggest thing, just getting over that vehicle part. But by the way, we bring in that general practitioner, that CPA, and we want to educate them, and most of them will just join us. We have thousands of professionals across the US, and they end up joining us, but that initial conversation can be a little bit scary, and sometimes if the CPA just doesn't know and they just say no because they have no incentive to say yes, because if they say yes and it works, that's fine, but if they say yes and they don't get paid, right? If they say yes, no, and it doesn't work, then they are like, oh no, why'd you say yes? So it's really that kind of that delicate part of that. So that's the first one. The other one would just be the internal one, right? Like, do I have control? Like, am I gonna lose my money, or can I have access to see it? And we have 24/7 access to view the funds. You can cash out whenever you want and just pay the tax. The funds only move with your signature. They're held at some of the largest banks in the world. TD Ameritrade is one of them. And essentially, that's the second one. Is once they get over that, that's pretty good. And the last one is the external one, just basically saying, is this better than the 1031, right? Will this actually solve my family and my wealth issues? And once they understand those three components, they're able to, a lot of them, move forward. We call it's by Russell Brunson. He talks about the big domino. Once you knock the vehicle, the internal, the external down, then the big domino falls and the rest of it takes care of itself.
So you've read Expert Secrets, my friend. Good for you.
Thanks.
Yeah, I'm a funnel hacker as well. So that's fantastic. Not surprised there. But so I want to tie this full circle because I think you're doing such a phenomenal job as going deep into the weeds, and I'm sure people can find out more. And we'll make sure that we'll have the call to action where they can work with you because you are the subject matter expert, and I'm glad you stepped into the lab with us. But to tie for full circle, because I know you mentioned the 1031 exchange, and that's what we're very familiar with, especially on the investor side. You had when you brought up 1031 exchange, you mentioned that a lot of folks, especially in this market, everyone's looking for a deal, and that with the time crunch and the requirements, that people are essentially forced to buy something at the same price or at a higher price. Essentially, it's not it's not sell high and buy low. It's actually the other way around, right? And so that was my biggest key takeaway. That's when the light bulb kind of went off, and I appreciate you doing that. But I want to go back now. In the lab, we have a lot of folks who come on, and some of them are syndicators, et cetera, and they might be listening and might be an operator. Does this still apply to an entity that's raising capital and that has limited partners involved and that's looking at an exit strategy down the road? You can see where I'm leading you here.
Absolutely. And this is one of the most exciting parts about the Deferred Sales Trust is it works for carried interest, and it also helps syndicators and operators attract and actually use a tool to get tax deferred money into their deal. So let's walk through that, okay? So most operators and syndicators, they don't allow 1031 exchanges. There's a couple of reasons. One, it can get complicated, okay? And then B, if they do, it has to be a big cash incision. They have to kind of carve out what's called a tenant in common into their deal. Yeah. And so that's the first thing. So most of them, I know 99% of them don't even allow it. The 1% that do it on a one-off basis. It's just not very common because it's complicated. The second part of that is when they sell, they don't often do 1031 exchanges because the whole entity must move, which means, let's imagine me and 20 investors were in your deal, Ruben, and you go to sell, like we all have to say yes, generally speaking, and therefore you, Ruben, say, no, forget it. We made our money, let's pay our tax, here's all your money, and then let's go to the next one. And this is what the Deferred Sales Trust, we call it the seamless partnership separation. And it's really, really powerful because we can go each of our own ways, each into our own deferred sales trust that's never commingled with anyone else, each based upon our own risk tolerance. Half of us can go and pay the tax, the other half can do the deferred sales trust. Or Ruben, as the operator, you could just, for your portion, you might say, look, I don't want to provide tax advice or be a part of this until I've done it myself. But on your next deal, you go for my own amount, I'm going to do my carried interest or my amount into the deferred sales trust. All of the other clients get their money back, and now you're tax deferred. And guess what? The next day, up to 80% of those funds, let's imagine it was $1 million in that trust, 80% can go to a brand new LLC, and that brand new LLC can invest into your new entity, which is buying a new property. Oh, by the way, with a brand new depreciation schedule. So there's a number of layers here which are very powerful. And so as an operator, your goal is to add value. So if you can show somebody how to defer capital gains tax when they come in, you've added value, which is going to attract more high net worth. And then on the exit, they could go into the deferred sales trust. You've added value, okay? And here's the cool part. Now they have an extra 30 to 50% that they can invest with you, right? So you're not having to raise as much money on the next one. So it's a win-win-win for everybody. And we can't get the message out fast enough, right? But it is about riding that bike for the first time, okay? It is, most commercial real estate is like a religion. By the way, I'm a part of that religion, right? The challenge is the 1031 exchange is like the doctrine, and most people just only look at that doctrine and they don't realize that no, there's an installment sale that you can do here, and it's a little more complex. You've never done it before, but it works, and it's also just as true of a doctrine, but you just have never used it. And so it's getting over that old mentality of I've got it all figured out, I can do this myself. But the gentleman who just closed the Georgia deal, he's done hundreds of deals, hundreds of 1031 exchanges, and he sold the $7.6 million multifamily. He did his deferred sales trust for the first time. So once you get it, once you get with us, once you get educated, which is what we want to provide, we want to be the guide, then it opens up the door, and it's like, oh, amazing. Now I'll do this all day long, and I'll buy at optimal timing. I'll buy with a new depreciation schedule. I'll keep deferring the tax. But the key is whatever you want to do, we're here to support you, and we want to clarify each option and then help you make the best decision based upon your goals.
That is fascinating, and I'm glad how you my key takeaway from that, and I want to make sure we bring that home, and correct me if I'm wrong. This would be a good time while you're here on that on the air, is that you essentially can do this tax deferred trust at the individual entity level. It sounds like some partners can go away and get their 30 or 40% tax while you can, as a limited entity, take that. That's fascinating. I hope you guys caught on to that. And if you go replay it, because I'm going to be replaying this myself, because you're dropping a lot of new value. And I'm so glad you're bringing this whole brand full circle, because, this is experiment real estate, the real estate experiment. It's about being open to new ideas and experimenting them. And obviously we don't do experiments that have not been successfully done by those ahead of us. So obviously, thank you, Brett, for joining us. Let's transition into the core rapid fire question. I always like to ask these questions because again, you're doing a fantastic job adding value to the community. Your energy, by the way, is fantastic. And you can tell you're really bought into that, which is very contagious. And I commend you for that. But, I always like to ask these rapid fire questions. It brings a little bit of out of who Brett really is. So let's dive in. Brett, what is a favorite book of yours?
Yeah, a favorite book of mine is by a gentleman named Jim Rohn, R-O-H-N, and it's called The Seasons of Life. And it talks about the human condition of spring, summer, fall, winter. And we're always moving through different seasons in different parts of our life. Like, for example, we're in this corona crisis, and this is definitely a winter, right? Absolutely. It's dark, it's gloomy, it's sad, it's despair. It's really, really tough out there. But remember, with every winter comes spring, right? And there's sunshine on the horizon, and it may take some time. It may take some faith. It's going to take some trust. It's going to take God's blessing, but there's always a spring. So I just love the way he talks about those conditions, and he talks about perseverance, and he talks about personal development. He talks about leadership, and he talks about majoring in the major things of life and taking opportunity of every single season to reflect and to plan and to use the gifts you've been given to make a difference in this world. So I highly recommend it. I've read it, 20 times. It's not a long book. It's just a powerful, amazing book.
That's wonderful. We'll definitely add that to the list now. Make sure we have that in the show notes. You seem like a very enlightened guy, and so I'm very curious to hear what this next one will be. And what is the best habit, Brett, that serves you every day?
Yeah, it's a Miracle Morton, Hell Elrod, and it's got to be that, and it's reading, it's the Bible, it's praying, it's meditating, it's exercise. I still haven't got the scribing down as well. It's visualizing. I've been really kind of studying visualization now, and a little bit more of Tony Robbins, getting to that a little more with actually using the way the brain is made up to visualize where you want to be and where you're going, and it's powerful, right? And so I'm an action guy, expressive driver, always moving 100 miles an hour, but I've got to learn to slow down, to reflect, to meditate, to read, to pray, to be all that I was created to be.
Yeah, I'm shaking in my head as I'm listening to this. If you guys are listening to this and you're not seeing the video, just because it's just fascinating the type of quality people that come in the lab. And there's some success leaves trails. And if you guys haven't read The Miracle Morning by Hal Herod, get your savers on. Moment of silence, affirmation, visualization, exercise, reading, and scribing. So it's oh man, very refreshing. I'm not surprised. What is the best tool that helps you excel throughout your day? It could be, I like to give you a little bit of insight. It could be an application. It could be some template. It could be anything. So 2 tools. The first one's Asana. It helps to keep me and my team on task for different tasks, and a project board. We like the whiteboard where we can set different categories and different projects and really communicate there versus email chains, which gets lost in a mess. That's the first one. The second one is Loom, L-O-O-M, and it's basically creating videos to discuss or explain, screen capture, and short videos to send out either inspiration or instruction, or basically being able to delegate certain tasks that help you to free up your time and energy to use the best gifts you've been given. And for me, it's creating content, it's being on podcasts like this, it's educating, it's being with the client to solve problems, not the nitty gritty stuff, which is not my strength and it's not the best use of my time. So I found that Loom is the best way to get it out of my brain, put it on a video, and then they can replay that over and over and over again. And I just think that's just really an amazing tool. Same cloth, my friend. Fantastic. I like to always ask this to see where you are as far as scale. So what would you rather have, 1 300 unit apartment or 3 100 unit apartments?
I'd rather have 3 100 unit apartments as long as the locations were I would say a little more diversified in different cities or different geographical locations, right? So as long as I knowing what I know now, right? So knowing what I know now, and I've owned investment real estate and senior housing and multifamily and retail and value add, like knowing what I know now, I'd want that. Now, if I was just starting out and I didn't know anything, then I'd want the 300 units, right? And I would want that. I'd be all in and I'd just live there for, I don't know, a couple of years and make sure that it really goes well. Then I would refinance and go buy another, 100 units over here or something.
Yeah, I'm so glad that you touched on that because we almost went through the episode without touching it. And I'm going to modify my next question. What would be your favorite type of a real estate asset? Because I know you mentioned, again, you're on the commercial, retail. Which one and why?
Yeah, so timing, right? And so right now, the demographics for me and where everything's going is the baby boomers and needs for health and needs for assisted living, memory care, and independent living. So anything that has to do with senior housing that has a higher barrier to entry and a higher, skill set, to me is very powerful, especially for the best in class. And so I partner and raise funds for as a kind of a silent investor on the side for a group where we're building a project right now in Sacramento. And so the second one would be like probably mobile home parks, if you can because I like the cash flow. Okay. And then the other one would be multifamily. Multifamily is always there. It's just, I think the prices have just gone through the roof, and these 4.5 cap deals or 4.75 deals, I just don't know if there's enough margin there right now. I always love multifamily, but something where there's housing and something where there's helping people with acuity, with health needs, those would be my favorite.
Excellent. Cash flow or equity?
Oh, so if I had to choose one, it would be cash flow, right? Because to me, cash flow gives you the opportunity to free up your time and energy, right? To be able to do the things for you and your family and to give back more and to increase that. Whereas equity, you could be, real estate rich and cash flow poor, which if the money's not flowing and working for you, it can be a bit stagnant. So if I had to choose one, it's definitely cash flow.
Manage or outsource?
One more time.
Self-manage or outsource?
Well, I would say you delegate, what is, you hire the who and don't be the how. This is another Russell Brunson expert secrets, ClickFunnels. So you have a vision. We all have a vision, right? And so the goal is to get to that vision as quickly as possible so we can help as many people as possible. Too often as entrepreneurs, we get stuck in doing the how, meaning we're doing it all of ourselves, and we think we can do it the best and we can save a buck and, we'll figure it out. And there's some pride in that, but at the bottom line is you're not serving yourself and your business and probably your family as well if you just hired the who being the one who's already put in the 10,000 hours, who's already the specialist in that area, who can do it. Yeah, they're going to charge, but they deserve it because they're adding value, and it's going to cost you more, sure, but actually it's going to cost you less because you're going to spend less time and energy wasting your time and energy on the how and get procrastinating. So for me, it's hiring the who, not being the how.
I love it. If you had one superpower in all your businesses and your real estate, which one do you think it would be, and which one would you choose?
Yeah, I think we're all given certain gifts in this life, and I think God's given me the gift of encouragement, right? The ability to encourage and lead others in a way that they feel loved and cared for, right? And also push them too, right? So I've whether be the captain of football, basketball team, and sports, learning that growing up, being one who encourages others to propel forward and do their best.
Fantastic. If you could describe a successful investor or business owner, which word would you pick, Brett?
If I had to choose one, a successful
investor. If you have to pick one word to describe a successful investor or business owner, what word would you pick?
I would say resolve, right? They're going to resolve to succeed, resolve to serve others, resolve to grow themselves, grow their profits, grow their leadership. They're going to resolve that no matter what, they're going to push forward, burn the ships, and move forward. And it's something that Winston Churchill had when he resolved that he was never going to give up, he was never going to stop fighting, when he was faced with the most unsurmountable odds and evil looking at him in the face. And so I would say resolve is what every entrepreneur, business owner, owner, and really any individual in this life needs to have.
That's fantastic. Right before we head out, I want to jump into the insider secrets, which is a real quick segment of, we know things have been a little bit crazy, and I like to get an idea of kind of how your brain is ticking as far as seeing opportunities, gaps in the marketplace, and also what we may foresee right now. We don't really know what's going on with how bad this impact might be, but what are some of your thoughts behind closed doors of inside the lab here, as we look at what we're facing and what kind of ways maybe you might be thinking of pivoting or things to factor in?
First of all, my heart goes out to all of those who have been affected by job loss, whose businesses have been decimated, whose business have been shut down, and who are hurting right now and are scared and not sure where to go, and are trying to pivot and trying to get a plan with, what do I do now, right? Mm-hmm. And where is this all going? And so, first of all, it's empathy, and then the second thing is, try to encourage and challenge those to pivot and take action. And, for example, I was on a call this morning with StoryBrand, and they're talking about, having a sales funnel and moving online. As much as you can get automated and move online and deliver content. And by the way, I think the world was already moving in that direction, right? And this coronavirus just is accelerating what was kind of already there, right?
Absolutely.
So now is the time to take action, and now is the time to do that. And then also, if you're in a position where you are doing okay, you got to help people, right? So for example, I'm a commercial real estate broker, but I'm also a realtor, and I've also helped friends and family sell their single family homes over the years, just as a kind of a gift to them. And so I'm using that as a gift to others. So if anyone lives in Sacramento, and by the way, if you're hearing this, during this Corona crisis, I'm offering my services for free, meaning I'll represent and sell your house, not charge any commission, and let you either pocket the difference if you need it, or just give it to a charity of your choice. So using the gifts and talents we've been given to help others right now who are most in need, and taking action to do that. And if it's just helping one person, right, or one family, survive during this time, now is the time to do it. Just take action, step out, and do that. So those would be my thoughts, just kind of personally. I guess financially and just the overall economy. I've never seen anything, and I'm only 36, and even in the '08 crash, I went through that. I've never seen anything hit so many levels all at once. It seems like there's like a big bomb that blew up, and the bomb that blew up was our entertainment is gone. Our social world is right now gone, at least physically. Our work shut down, right? Economies have stopped. The stock market crashed. So it's been a huge bomb, and it's also worldwide. It's not just specific to one state or one location or one event. Yeah. It's really, really kind of scary to see what they can have. The other part of it is I actually kind of feel blessed in that, this coronavirus, imagine it was affecting not only those who are immune deficient and those who are older, but it was affecting healthy people or kids. In a sense, it's like, this is preparing us just in case something else like this comes in the future that affects everybody, and everyone can die, right? Not just those who are most vulnerable. So prepare as much as you can, count the blessings where you can, and then try to get on any way you can socialize and connect with people online. I highly encourage that, because it can get lonely real fast.
Absolutely, and that definitely brought up our spirits there, Brett, today. And honestly, I can't let this surpass and go under the radar. I think what you're doing with the realtor license is beautiful. I mean, good for you, and I commend you for that. That's very that says a lot about you. So honestly, good for you. That was very heartwarming, and I think there's opportunity to continue to help people online. There's definitely opportunity to learn from this as well too. I know there's some areas in our businesses where we can kind of think of, okay, maybe we need to double down on this technology road that we were going down anyway. So I think you hit all the points. Fantastic, Brett. This was great. I can't thank you enough for your time. We definitely went a little bit deeper and a lot further, and I appreciate your extra bonus minutes. I always like to ask, is there any question that you wish I would have asked you?
Just has to do with the estate tax. And so one thing about the Deferred Sales Trust is truly unique is the fact that it can help ultra high net worth individuals. So if you're listening to this podcast and you're ultra high net worth or you serve those, and that's someone who's worth more than 22 million, is married, and 11 million and who's single, I want you to think about how the Deferred Sales Trust right now can remove all of those funds outside the taxable estate and save 40%. One of the most common misconceptions with the 1031 is I can just 1031 and die, right? Meaning just exchange, die, stepped up basis, and I walk away tax free. That's true for capital gains tax, but it's not true for the estate tax, which is taxed at 40% of anything above those exemptions. So I'll give you an example. Imagine, Ruben, you're married, you're worth $52 million, and imagine all $52 million is inside the taxable estate. Well, if you were to die today and your spouse dies today and that passes, yeah, your kids get the stepped up basis to $52 million, but that $30 million that's above and beyond that exemption, which is 22, is going to be taxed at 40%. What's that? That's $12 million. Okay. Wow. So that $12 million goes to the government, who's $23 trillion in debt. Probably, they just spend another $2.2 trillion. Let's just call it $26 trillion by the time it all happens. And now they're going to waste it away pretty fast, okay? Now you, though, Ruben, you can keep all of that into your estate, and you can use that to fund those who are most in need, those who are in the darkest places. One of those charities we support is Agape International. We're fighting child sex slavery. It could be whatever passionate thing you're passionate about. You can save that. Nothing else can do it all at once. So most of the high net worth people, before they meet us, they're doing family limited partnerships, and they're doing these gifting things, and they're slowly gifting small amounts out, but they can't get it out fast enough. So the intention is to get it out. The solution is the Deferred Sales Trust. You could sell, let's say, that $30 million apartment complex today, move it all outside the taxable estate. Now we've just deferred it all, capital gains tax. We move it outside the taxable estate. We saved you 40%. So I say this as a way, part of what we're passionate about is unlocking capital to help those most in need, right? And we believe if we can keep it with the people, the money with the people, we can keep it accountable to charities or people that we're giving to in our local community. That is the best part about what we do. That's and right. So ultra high net worth, estate tax, take a look at it. It's powerful.
That's fantastic. Look, I can't thank you enough, Brett, for dropping all this knowledge. I will definitely be replaying this thing. There's a lot of new things that I will benefit from in addition to the rest of the community out there, which I know we were stoked to having you step into the lab with us. Definitely brought out those goggles, wet gloves, and everything. So we're ready to go. I appreciate that. Brett, where can the people find out more about what you do, who you are, and your services?
Yes. So the first place is capitalgainstaxsolutions.com. That's kind of the hub. I also have a Capital Gains Tax Solutions podcast, which, by the way, Ruben, I'd love for you to be on if you'd be my guest. Wow. And the next place would be YouTube or LinkedIn or Facebook. Just search Brett Swarts, add me as a friend, add me, like our pages, and then check out the YouTube for sure, because it gives 3 to 5 minute videos, which really break it down. Yeah. And the last thing is the Escape Feeling Trapped by Capital Gains Tax. It's a free guide for you. Just go to my website and you can download that free guide right away.
That is awesome. We'll make sure we have that in the show notes as well. Brett, just like that, thank you for coming, and we are out.